This is the Brandon T. Adams audio experience. I'm Brandon T. Adams, and this is episode 39. And today I'm going to do an episode around budgeting advice, investing, and advice from an entrepreneur to an entrepreneur. Going to share my lessons learned, going to share the tips, what I do, and also just looking at how I look at revenue, money, and just some tips for you to look at as you're growing your business. And so a few things here. One, and I'm going to just riff on this. I'm going to share different things that come to my mind here. But the first thing is, think about every dollar that you have going out, that is going out for your business. How is that giving you a return on your investment? I look at everything in investment. And it could be everything. Literally, if you're buying the dinner for somebody, if you're investing in that relationship and that experience, if you're paying for, let's say, Buzzsprout every month to host your podcast, or if you're paying for Dropbox to have your videos hosted, or if you're paying an editor, you're paying somebody to do your accounting services, you're paying somebody to do your social media, you're paying somebody to whatever it is that you're paying somebody to do, or you're investing in a different company, how can that money give you a return? And when you start thinking about that, and you're very smart with how you allocate your capital, and understanding that, hey, if I'm going to put money here, it's going to give me a return, then it's going to be a lot better for you in your financial income in the time to come. But also looking at a lot of things that I did early on in my career, I was always in for the long game. So if I invested in a relationship, if I invested in a mastermind, a coach, or again, travel to go somewhere, what was the long-term value of that? What was the ROI? And after years of doing this, over how many decades now? I mean, really hardcore for a decade of investing in trips, investing in people, investing in different things for my business. I really saw what the outcome was. If there is one thing that you can take away from this, one thing is this. Bring in more than you put out. Bring in more money that you throw out. That sounds simple, and Rich Dad, Poor Dad talks about this. I remember reading that book, Rich Dad, Poor Dad, great book. But think about, make sure you're bringing in more money than you're throwing out. You're spending less than you're actually bringing in. Again, most people think about that. And the only way for you to really understand this is by going through your bank account and looking at your expenses. I do this. You know, my mom taught me this a long time ago because she's a banker. And she had me, I literally reconciled my checkbook, and I went through every month, every expense, where it was, what it was coming from. And now I do that to this day in a different way. In my notes section in my computer, I go through my expenses for the month, how much I was spending, how much I was bringing in, where I need to really watch my spending, and what is giving me a positive ROI. So those are some thoughts to think about. Be very cautious or conscious of where you're spending your money. There's another good book out there that helped me in this. It's called Profit First. It talks about how you pay yourself first before you start putting money out. Allocate money first. There's also a saying, Napoleon Hill talks about this, how you should save. Anytime money comes in, you automatically allocate X amount of it, 5%, 10% of it, to whether you're saving, investing, put it somewhere where you don't even think about. It's an automatic process that you do that you don't even think about. That money comes in, and you put it into this separate account. You have a separate savings account, separate bank account. And then another thing to think about, especially when you start making real money, is taxes. The government is always going to get their money. I learned that the hard way when I had back taxes once, but I didn't realize how much I owed the government, and actually got 9 days before my wedding. They said, hey, we made a mistake and you owe this much money. It was a large sum of money. And I was freaking out. I'm like, what? How do I owe that much money? So think about what you bring in. How much are you paying in taxes? And this is why you have different write-offs, but you can only write off so many things. So you think about when I'm traveling, there's business dinners. When I'm buying things with my business, I'm investing in different things, video content, whatever it is, you can actually write that off. You can write that off. And at the end of the day, what's left over that you actually pay yourself, that's what's taxed. And one thing that I learned early on is I wanted to be able to get to a point where I wasn't getting taxed at a higher rate. And so what I did is more consulting for equity, where I got into opportunities where I can get warrants in companies, stock in companies, and then at the point when I sell, when I actually have the option to sell down the road, by the way, I'm no accountant and no CPA, I'm just giving you how I look at things, I'm paying capital gains. So let's say I have stock for 2 years in a company, and then I eventually exercise it, and I got in at a certain price, and then I sell at a certain price. That difference, I'm paying 15% on the amount that I liquidate. So if it's $1 million, 15% of that is $150,000. Am I doing my math right? Versus paying 35 to 40% or more on that money. So I'm looking at the long term. How can I invest in something now and delay the tax event, and then down the line, I'll get a lump sum, pay less on taxes. And that's been a strategy of mine now. I've built up my portfolio of like 30 some companies now that have equity in, from telemedicine to in the cannabis, into I got a tequila seltzer company, I got tech, I got AI, I got blockchain, I got crypto, you name it, I'm in it. And so I diversified my income, and I'm putting myself in a position where I have all these portfolios of companies that some will go public, some are public, some will be liquidation events down the road where the company sells, I get a large sum of money. And then all of them, in most cases, I'm getting paid a monthly fee, so I have cash along the way, which leads to my next thing, recurring revenue. Setting up recurring revenue where you have situation contracts where you're getting paid every single month. It's not a one and done deal. So you don't have to worry, hey, I got to get another deal this month, and then, next month, there's no recurring revenue from that. How can you set it up where you're getting paid every single month from the business or the company you're working with? So you're getting subscription-based or recurring revenue, so it's consistent. So I can do a deal now, and for the next year, I know every month I'm getting paid from it, versus just getting a deal now, and that's it. So recurring revenue. Making sure there's systems in place to get recurring revenue for your products or services. And I have, for my packages, I'll set up sometimes where, okay, hey, you can pay in a lump sum, and you get a little bit of a discount, or you can pay over time, and it costs more, and they have more time to pay for it. So I'm looking just on the revenue side of things and the budgeting, and how I look at money in my investments. And so those are just kind of sharing insight of how I think. And as an entrepreneur, I like the old saying, you eat what you kill. If you aren't making deals happen, if you're not making something happen, you ain't getting paid. So you eat what you kill. As a hunter, if you don't kill an animal, you don't eat. As a business person, as an entrepreneur, if you don't get a deal, if you don't sell something, you get no money. And that's how entrepreneurs think. Employees think differently, where, okay, I get paid no matter what. But as an entrepreneur, and that's the beautiful side, if you do good at hunting, you get a lot more money than an employee would. But it takes time. You got to put in the work and the effort. But that's why I love entrepreneurship. It's you. You got to figure it out. If you don't, it's on you, nobody else. So making sure you put in the work. And I always look at it as no matter what, any big deal I have, the amount of money I have coming in, I treat it as if I'm still the underdog. I'm always challenging myself. I'm putting myself in a position where, hey, even though I got that big deal, I'm hungry. I'm ready to go. I'm ready for the next big opportunity. And I want to continue to grow my wealth, and I want to continue to invest my wealth. Going back to how I started at the beginning, how am I allocating my money? Everything I spend, I look at how does it give me a return. If I'm spending money on ads, advertisements, Facebook, Instagram, TikTok, YouTube, okay, am I acquiring a customer? If I'm acquiring an email address, a customer, what is the lifetime value of that? If I spend $1,000, okay, to acquire 10 leads, 20 leads, what's the value of that lead? In my case, it's worth a lot more than a regular one. It could be 10, 20, 30, 100 grand or more. What's the value of that, and what is the time frame of when it turns into an actual client? So I know it's a longer game, but from time of doing this, I know it pays off. So you got to invest in that exposure. It's like video content. That's more investing your time, but if you're doing more high-end video content, you're investing your money to create content that you're putting online that's there forever. People see it, they see it enough, they eventually reach out to you, they want to work with you, and that becomes a client. That's brand exposure. You're investing in your brand, you're investing in video content, you're investing in your story and your messaging that's seen online. And the more people that know you, like you, and trust you are more likely to work with you. So that's how I look at my investments. Now going back to like dinners and stuff. So I travel a lot. I'm traveling different places. Heck, the plane ticket, the hotel is an investment, but I'm putting myself in a position to be somewhere where I meet a new person or build a relationship where it could turn into a business relationship or a deal. So that's how I look at it, but also looking at if I am buying them a dinner, I'm doing something like, for one, don't be that person that always expects the other person to buy dinner. That's a big pet peeve of mine. For me, I will allow people to buy me dinner. I thank them for it, but usually I want to be the one that does buy the dinner or buys the drinks to just show my appreciation for our time together, especially if they're allowing me to meet with them somewhere. Like, I am the one that takes the bill because that's what I do. And so thinking about how can you create that ultimate experience where you're doing something for somebody, creating a great experience where they don't forget that, and they're more likely to refer something to you. They're more likely to do business with you. So I've done a lot of dinners, and again, looking at that, it's an expense or almost an investment that will return over time because they're creating an experience. I look at events. I put on events. I put a lot of money into events to create experiences, to bring people in a room, find ways to work together, and again, that turns into potential deal flow. So this is how my mind works when I'm thinking about stuff. Now, monthly expenses. I'll tell you, when I look at certain things, I try to justify it because I can be very frugal in terms of how I spend my money. For one, like I look at clothing. I wear the same thing every day. I don't spend a lot of money on clothing. I look at like Netflix or Amazon. I mean, I do pay for them because I do enjoy the entertainment, but also it gives me creativity. That's my justification. It gives me creativity to think about how I can create better content for my shows. So that's how I look at it. Then I want to look at other expenses that you have, regular expenses. I mean, I have a place that I rent. I look at it differently. Some people say, oh, you need to own a home. You need to own a house. I used to own a house. But then you have all the upkeep. You have all the mental space that it takes. When you rent, it's just something I can get out of and I can leave at any time. But also it's something that I don't have to worry about mowing the lawn, especially at this apartment, or other things that come with that, the mental space it takes. So these are all over the place, all the different ways how I look at the financial side of things. But to summarize here, to make it very simple, bring in more money than you put out. Be smart with your capital. When you look at your money, the money that you put out is that investment. How are you going to get a return on that? And is it getting a return? Bring in recurring revenue and also invest. Take a portion of money, invest or save in some ways. Put it into something that's going to make the money grow. If it sits on a savings account, by the way, even with inflation, like it's not doing you very much good there. How can you put it into places where it can grow? And that's why people invest money. They invest in companies. They invest in various things. So that's my thoughts around budgeting. I think this is more of an investment show than budgeting. But I'd love to hear your thoughts on this. Feel free to send me an email, brandon@brandontadams.com. Send me an email. Let me know your thoughts or reach out to me on social media @BrandonTAdams. And with that, budget well, my friends. Go make some money, invest wisely. And here's to your success.